Yo guys, what is up? Fabio here. Hope you guys are all doing well and welcome back to the daily market outlook. So the first week of 2022, can't wait to get started, or couldn't wait to get started. So we're just going to start on this beautiful Monday. Wednesday is probably when I'm going to start trading again, but I am already looking at the markets to see if I do see some interesting opportunities. So some interesting movements came into the market just before the end of the year. So let's see if we can capitalize on those interesting movements. Furthermore, hope you guys have all had a great end to 2021. If you have any questions whatsoever going into this new year, make sure to reach out to me through Discord. Link is in the description down below. And without further ado, let's have a look at what the markets has been doing. So first of all, of course, we always focus on the dollar index first. And the dollar index has been stuck inside of this weekly range, which I have refined in towards a daily area of supply located over here. And as you can see, we have been reacting to that daily area of supply. So the dollar index has been stuck within this range over here, as you can see, from over here down to over here. This is a 4-hour range. So if we focus on the 4-hour, we can then obviously see is that this over here is your low and this over here is your high, and this is essentially all the pullback. Of course, inside of this 4-hour structure we have up and down trends, because we had of course a push down, pullback, push down, then over here a break of structure, then of course the pullback, then the uptrend once again. After that became a little bit consolidative, but yeah, as you guys can see, it is still pretty messy. So at the moment, what am I expecting? Well, I'm just going to be waiting for the dollar index to break out, essentially. When you're range trading, it's always good to keep in mind that you can use the rule of, okay, well, I'm only going to be buying at the bottom 25% and only going to be selling from the top 75%, and everything in between is just going to be ranging. I'm just going to leave that price action for what it is. As you can see, the 75% mark got hit, drop, hit, drop, hit, drop, hit, drop, hit, drop. So essentially, as you can see, that 75% mark, without even really planning it in as resistance myself, has been acting as a beautiful area of support, and so has that 25% mark as well. So as you can see over here, we broke that 25% mark. We broke quite a lot of structure. So what we could now potentially expect is for a pullback in towards, let's say, this kind of range over here, which is acting as supply and cause that structure break, and from there a further sell-off back down in towards these areas of daily demand. Because if we look at the daily areas of those demand, we can clearly see, okay, sell candle engulfed by a buy candle, always nice to see. And over here, of course, once again, kind of this sell to buy wick and range, clearly engulfed by this beautiful bullish candle over here, which means that there's a lot of demand located inside this baseline over here and inside of this general kind of consolidation area. This level is of course going to be stronger, as this is your daily swing low, this is your daily swing high. The lower we come in towards that swing range, the higher probability for catching the reversal, let me put it that way. And especially this box number 1 is looking really good to start trading from. Once we reach that level, I will be refining it to a 4-hour area of demand, and we will be looking for some potential trades. For now, we just have to wait until we break out of this area of consolidation. So yeah, let's see what happens. Without further ado, let's just dive into our first pair, which is of course Aussie dollar. So Aussie dollar, guys, and as we can see, Aussie dollar is currently bearish on the daily and bearish on the weekly, currently located inside of weekly demand. That's also where we have reacted from now twice. So what I'm expecting, well, let's dive in towards the lower time frame and have a look at the 4-hour. So the 4-hour is bullish, as you can all see. Kind of have this demand chain going on over here. So demand gets filled, this becomes demand, gets filled, and now we have a new area of demand. So during my weekend analysis, I marked out these equal lows over here where liquidity was lying below, and I was kind of waiting for a push in towards this area of demand to then probably or potentially start looking for those longs on the lower time frame. However, as you can see, we just grabbed liquidity and I've been reversing ever since. So what I don't really like and what I do really like. So what I don't really like about Aussie dollar at the moment is the fact that each time a high gets broken, we directly see a retracement. That is not a sign of strong bullish momentum, first of all. Furthermore, we also have kind of this ascending price action, and ascending price action is often a sign of bearishness to come. Therefore, I am a little bit hesitant with looking for those longs, but what I do know is that we do have strong areas of supply just a little bit higher from where I would preferably be selling. This area of supply over here just got tapped into, so we could still use that as kind of an addition for our sell bias. Furthermore, if we use the premium versus discount tool, which is tapped on, we can see that we exactly tapped into the equilibrium of this daily bearish range. So this could ignite a further push back down in towards downside. So let's keep our eyes open. Once we break this 4-hour swing low, I will be looking for those shorts fall on. Hopefully then supply is, for instance, created and we can start looking for those shorts back down lower. For now, no buys until we really come back in towards either this area or supply, but preferably this highest area of supply. That is where the high probability shorts are going to be coming from. So yep, that's Aussie dollar. Let's head over to euro dollar and euro dollar, guys. So euro dollar at the moment is has been pulling back in towards the downside this morning. Looking at the 4-hour time frame, we can clearly see just kind of on Aussie dollar, this area of demand playing up. So we had a clear demand chain going on, uptrend, pullback, consolidation, push up, pullback, back in towards consolidation, boom, push back up, and now we have a new area of consolidation. So let me just mark this out. So this area of demand on the 4-hour broke structure over here, therefore we can clearly see that was powerful demand, and at the moment we have once again seen another push up, breaking this high over here, and now this area and this wick on the 4-hour has become my demand zone. So I'm not going to be taking this bullish candle or this bearish candle over here. Why? Because that bearish candle has already been filled by that wick where I currently now have demand on. So if I use this wick for demand and then go in towards, let's say, the 1-hour time frame, you can clearly see that these are imbalance candles being engulfed. You could further refine it in towards the 1-hour imbalance candle, but I'll preferably just keep it on the 4-hour wick, as I have backtested that as well. So what I'm currently waiting for is a tap in towards this 4-hour area of demand, and then I will be looking for those longs. At the moment, because this swing high got broken by this swing low, this is currently the low of our swing range. So even if we, let's say, break this low and this low, we are still going to be bullish in swing structure. Of course not in internal structure, but in swing structure we will be, and I will then be waiting for that internal structure once again to flip bullish, and then we can start looking for those longs once again back up. But for now I have my eyes on this area of demand, and once we come in towards either of these areas of daily supply, so this daily supply or this daily supply, I will be looking for those shorts. And this is a area of weekly supply, and we are currently still located inside weekly supply over here. So this is your weekly supply currently acting as support. This over here from this high to this low is your bearish swing range, and for now we're just waiting for a pullback just a little bit higher to start shorting from, let's say, the equilibrium of the range or that 618 Fibonacci or 786 Fibonacci retracement level. So I hope that is clear for all of you. So yeah, let's head over to our next pair, which is pound dollar and pound dollar, guys. So what am I currently waiting on pound dollar? Well, pound dollar for me is currently bearish. This is the bearish swing leg, and as you can see, we've clearly tapped in towards this area of daily supply. At the moment, if we look down in towards the lower time frame, we can clearly see that we also had a tap and a wick in towards 4-hour supply. So for now, what am I waiting for? Well, I am waiting for a push down lower in towards these areas of demand before potentially looking for longs. For the rest, I'm not really going to be looking at any longs at all, purely just because I want to see a further push down. This is not a good long or longing region in my opinion. Furthermore, because this is of course an area of supply on both the daily and the 4-hour. If we go back towards the daily, this was also an area of supply, and we also had a daily baseline over here. So we had this bullish candle engulfed by this bearish candle, but as you can see, we already kind of wicked in towards that range if we were to draw the zone from wick to wick. So preferably we're either going to be reacting from the current supply area where we are currently at, or from this one up above higher at around 786 and the 0.88 Fibonacci retracement level. Another reason why I really prefer that higher zone is because of the fact that we still have these equal highs located over here, which could get taken out in my opinion. So yeah, for now I'm just going to be waiting on pound dollar, not really interacting with the pair at the moment. If we start pushing up, all fine by me. I'll just be waiting for that higher zone. If we push down, I will be looking for longs from these areas of demand as the 4-hour structure is of course bullish over here, and this could then be your 4-hour pullback, and then we could look for those longs on the 4-hour pullback. So yep, that is it from pound dollar. Let's head over to Kiwi dollar. And Kiwi dollar, guys, so Kiwi dollar is bullish, but Kiwi dollar kind of has the same problem as Aussie dollar in my opinion. You can see that each time we break a high, we see a direct retracement. For now, what am I waiting for? Well, I am waiting for a push down lower in towards my area of demand to then look for potential longs. This is your 4-hour bullish kind of like range, and this would be of course the low of the range, so a good area to go long from. However, we still have fresh areas of 4-hour demand located over here, also another nice area over here, so we could still look for longs from down below over there. If we go in towards the daily time frame, what we can then see is that we have a very large daily bearish swing leg. So this was essentially your break of structure on the daily, these two bullish legs over here. Then we got the break of structure of this low over here. So the daily is now bearish from over here all the way down to over here. So what I'm currently waiting for, of course, is a push up higher, because you always want to see that bigger retracement, right? I preferably don't want to just see a, what is it? Not even a 0.382 fib retracement at the moment. I just want to see that bigger retracement back up higher. So let's say at least in towards that 618, or in towards, let's say, the 0.5. Let me just adjust this and add on the 0.5 as well. So yeah, at least the 0.5, because as we can see on the 0.5, we also have some supply located over there. We also had supply located over here, and we also have supply up above over here. So these are kind of course, yeah, you can see all these different areas of supply, but the thing is, we just have to wait for us to reach that supply, and then we can use the lower time frame, so the 4-hour, as kind of our entry confirmation model, because then once the 4-hour flips bearish inside of that daily area of supply, you then have the confluence to start going and looking for those shorts. So yeah, that's Kiwi dollar, guys. And now let's head over into our last pair, which is of course gold. And gold, guys, so gold I'm just going to be doing on the 4-hour. So gold has been acting beautifully. I did say a few times in the community when I was not trading, of course, that I was looking for longs. I wasn't trading, but essentially I was just paper trading at times, and I was looking for longs on gold. So why was I looking for longs on gold? Well, because the structure on the 4-hour was essentially bullish, and December always tends to be a bullish month for gold. So what we were seeing essentially is that we had, of course, this kind of like downtrend over here with the 4-hour break of structure, 4-hour break of structure. But then we broke this high over here, which broke this low over here. So we flipped bullish. So then what did we see? We saw the push up, the pullback, then another push up, break of structure of this high over here, and then we saw a pullback in towards this area of demand located over here. So this 4-hour wick was our area of demand. I also drew this line on it, 1794. And yeah, essentially what we saw was that we came with lots of momentum in towards that wick over here, which on the lower time frame is going to be an engulfed candle. Let me show it to you guys. Yeah, so look, on the 1-hour, this is a clear area of demand, and you can see that we clearly came in towards that 1-hour demand, which was a 4-hour wick. We grabbed liquidity underneath this low over here, so this swing low over here wasn't or hadn't been taken out by, let's say, this low. This low tried to take out that low, but failed to do so. So I knew that there was still a lot of liquidity based over here. Demand was based just below that area of liquidity. Price comes in and then just absolutely reverses back out. So beautiful price action on gold, to be honest. But yeah, sadly I wasn't trading. But for now, what has happened? So we've now seen another break of structure. So over here, we've had a new 4-hour break of structure. So gold is now once again bullish. So at the moment, what am I kind of like looking into? Well, this is now your swing low. This is now your swing high. This has now become your swing range. So now let's have a look. Okay, where can we then identify areas of demand? So my main areas of demand would have to be this sell to buy candle over here, and over here, this range over here. So yeah, these are kind of the two zones that I'm going to be looking at. And for the rest, yeah, we're just going to be bullish in between this high of 1831 down towards 1789. So who knows, we might see a deeper pullback in towards demand, then start flying, or an even deeper pullback in towards this demand and then start flying. That's kind of what I'm going to be looking at on gold. So yeah, let's see. I'm kind of projecting us to hit the 1840 region still. That's still kind of like a projection of mine. And from there, we can then potentially start looking for some further push downwards. So yeah guys, that was all for today. A little bit of a longer video than normal, but I hope you guys enjoyed this first video of 2022. Wish you all a fantastic day, and if you have any questions as per normal, just make sure to reach out to me. Thanks guys.